Good morning, and welcome to today's discussion. I'm Sonia.
And I'm Simon. We're covering a range of stories today, starting with some significant developments in the oil market.
Let's begin with the news that oil prices have fallen following a ceasefire agreement between Israel and Lebanon.
That's right. The reporting suggests that this deal has boosted hopes for a broader regional peace agreement, which could potentially reopen the Strait of Hormuz.
Exactly. The Strait of Hormuz is a critical choke point for global oil supplies. If it's reopened, it could significantly ease supply concerns and potentially lower oil prices further.
So what's the current state of oil prices? Are they reflecting this new development?
According to the latest data, Brent futures are down 87 cents, or 0.89%, at $96.92 a barrel. This drop indicates that the market is responding positively to the ceasefire news.
That's a significant reaction. But what about the broader context? How does this ceasefire fit into the larger geopolitical landscape?
The ceasefire between Israel and Lebanon is seen as a potential step towards reducing tensions in the region. If this leads to a wider peace agreement, it could have a positive impact on oil supplies and prices.
And what are the potential implications for the global economy if oil prices do stabilize or decrease further?
Lower oil prices can lead to reduced production costs across various industries, potentially boosting economic activity. It could also ease some of the inflationary pressures.
Shifting gears, let's talk about Quantinuum's recent IPO. The stock opened at $68 per share, which is above its initial pricing.
That's right. Quantinuum's IPO was quite notable, with the company being valued at over $15 billion. Honeywell, which backed Quantinuum, will retain a majority stake in the company.
So how did the market react to Quantinuum's IPO? Was there a lot of interest?
The stock initially popped by 13%, but then faded somewhat during the first day of trading. Despite that, it remained in the green, indicating a positive reception from investors.
That's interesting. The valuation of $15 billion is quite high, especially considering the company's revenue and cash burn situation. What are your thoughts on that?
The reporting highlights that Quantinuum has minimal revenue and high cash burn, which raises some questions about its valuation. However, the company's potential in the quantum computing space is significant.
Let's move on to Indigo's decision to suspend flights to several international destinations.
Indigo has temporarily stopped services to destinations like Hong Kong, Shanghai, and a few others due to rising costs and softer demand.
What's driving this decision? Is it purely cost-related, or are there other factors at play?
According to the reports, Indigo cited a challenging cost environment and softer demand in the upcoming quarter as the reasons for suspending these flights.
So how might this affect Indigo's overall operations and passengers?
The suspensions are temporary until September 30, so passengers will likely face some disruptions. For Indigo, it's a strategic move to manage costs during a period of softer demand.
Let's discuss PhysicsWallah's recent announcement regarding its lending strategy.
PhysicsWallah has decided to partner with regulated NBFCs for student financing instead of providing direct loans. This move has led to an 18% jump in its shares.
What's the rationale behind this change in strategy?
By partnering with NBFCs, PhysicsWallah aims to reduce its balance sheet exposure and credit risks. It will continue to act as a technology platform connecting students with lending partners.
How might this impact PhysicsWallah's business model and its students?
The new strategy could enhance affordability and scalability for students by connecting them with compliant lending partners.
For PhysicsWallah, it reduces financial risks.
Finally, let's talk about Pinterest's significant deal with Amazon Web Services. Pinterest has committed to spend $4 billion on AWS cloud services through 2031. This deal is aimed at boosting Pinterest's AI capabilities and infrastructure.
That's a substantial investment. What are the expected outcomes from this partnership?
The partnership will help Pinterest enhance its AI features, such as visual search using Amazon's custom chips. This should improve performance and efficiency for Pinterest's growing AI initiatives.
So how does this fit into Pinterest's overall strategy, especially given the challenges they faced with user engagement?
Pinterest is investing heavily in its future by enhancing its AI infrastructure. This move is likely aimed at improving user experience and driving engagement.
Well, that's all for today's discussion. Thank you for tuning in.
Goodbye, and see you later.